Is Enterprise Bancorp a good value in the market at the moment? A question that's no doubt crossed the minds of many, especially those with an eye on the banking sector. As we peel back the layers of financial data and economic insight surrounding this resilient regional bank, we're driven by one key objective: to determine whether Enterprise Bancorp holds its weight in value. So buckle up and prepare for a deep dive into the financials of Enterprise Bancorp. Today, we dive into the financials of Enterprise Bancorp to answer this question. Over the past 3 years, Enterprise Bancorp has seen a significant increase in its earnings per share, with a growth of 39%. This is a notable accomplishment for any company in the banking sector, especially considering the economic upheavals we have witnessed in recent years. However, it's intriguing to observe that despite this impressive growth in earnings per share, the stock of Enterprise Bancorp has not performed as well as one might expect. In fact, it has underperformed compared to the S&P 500. This divergence between the earnings per share and the stock performance could be largely attributed to the negative market sentiment towards regional banks. This sentiment has been fueled by the collapse of several prominent players in the banking sector, such as Silicon Valley Bank, Credit Suisse, and First Republic. But let's delve a little deeper. Despite the unfavorable market sentiment and the economic challenges, Enterprise Bancorp has displayed a remarkable resilience. It has weathered economic downturns, maintaining a conservative loan portfolio, and even growing its earnings per share during the Great Recession. This resilience was once again demonstrated during the COVID-19 crisis, where the bank saw only a minimal decrease in its earnings per share and maintained a healthy trend in deposits. Enterprise Bancorp has not only remained profitable for 135 consecutive quarters, but it also has a consistent track record of earnings growth. This is testament to its strong business model and conservative management approach. Moreover, the bank is recognized as a dividend champion with 29 consecutive years of dividend growth and a rock-solid payout ratio. This demonstrates the bank's commitment to reward its shareholders consistently. So, while the stock performance may currently be underwhelming, it's important to look beyond the present. Enterprise Bancorp has shown remarkable resilience and potential for growth. It has proven its ability to recover from economic downturns and has consistently increased its earnings per share. The stock is currently trading at a low valuation level, offering potential upside when market sentiment improves. Despite the poor stock performance, Enterprise Bancorp has shown resilience and potential for growth. Currently, Enterprise Bancorp is trading at a relatively low valuation. Now, what does this mean for potential investors? Well, when we talk about valuation, we're essentially looking at the company's worth in the current market. In the case of Enterprise Bancorp, the stock is trading at a level that could be considered quite a bargain. One of the key indicators of this is the bank's status as a dividend champion. For 29 consecutive years, Enterprise Bancorp has managed to increase its dividend payout, which is a testament to its financial health and sustainability. Now, for those who aren't familiar with the term, a dividend champion is a company that has consistently increased its dividend for at least 25 years. It's a title that isn't easily earned, and needless to say, it's a promising sign for potential investors. But that's not all. Enterprise Bancorp has also demonstrated consistent profitability, having remained in the black for 135 consecutive quarters. That's over 3 decades of consistent earnings, even during economic downturns like the Great Recession and the recent COVID-19 crisis. This level of financial resilience is something that can't be ignored when considering the value of a stock. However, it's also important to consider potential risks. No investment is without its share of uncertainties, and the financial sector is no exception. The possibility of another financial crisis or a severe recession always looms. But it's worth noting that Enterprise Bancorp has proven its ability to recover, displaying resilience in the face of adversity. So what does all this mean for you as an investor? Well, considering the low valuation of Enterprise Bancorp's stock, its status as a dividend champion, its consistent profitability, and demonstrated resilience, there is a strong case for potential upside. The stock may be undervalued at present, but as market sentiment improves, there could be substantial room for growth. The low valuation of Enterprise Bancorp's stock, combined with its financial resilience and dividend growth, suggests a potential upside for investors. So if you're looking for a potentially undervalued stock with a track record of financial stability, Enterprise Bancorp might just be worth a closer look. To summarize, Enterprise Bancorp has shown consistent earnings per share growth, resilience during economic downturns, and is currently trading at a low valuation. Over the past 3 years, its earnings per share have grown by 39%, despite the stock underperforming the S&P 500. This underperformance is primarily due to negative market sentiment towards regional banks, a trend triggered by the collapse of several prominent institutions. However, Enterprise Bancorp has demonstrated its strength during these trying times. It showed resilience during the Great Recession and the recent COVID-19 crisis, maintaining a conservative loan portfolio and even growing its earnings per share. This resilience is further reflected in its impressive track record of remaining profitable for 135 consecutive quarters. In terms of valuation, Enterprise Bancorp is currently trading at a low level, offering potential upside when market sentiment improves. It's also worth noting that the bank is a dividend champion with 29 consecutive years of dividend growth, boasting a rock-solid payout ratio. However, as with any investment, potential risks loom on the horizon. Another bout of financial turmoil or a severe recession could impact the bank's performance. But given its proven ability to recover, Enterprise Bancorp is likely to reward long-term investors who weather these storms. That's it for today's analysis on Enterprise Bancorp. If you found this video informative, don't forget to subscribe for more insightful content.